We're seeing some big U.S. banks near or at record highs today. Second quarter profit at Morgan Stanley topped analyst estimates. We've also seen a gain for Bank of America on a bullish outlook for its net interest income. Let's get more from Stephen Biggar, Director of Financial Services Research at Argus Research. Oh, we don't have Stephen yet. Maybe we could put up a quick chart for JP Morgan because it has traded to a record high today. There's a one-year chart. Oh, no, I think we got our M and our P mixed up. It should be JPM, as you know. There we have it. Maybe we can throw up a 10-year chart for JP Morgan. And you can see it's been surging. It's a pretty good story for Morgan Stanley as well. And let's have a look at a 10-year chart for Morgan Stanley, because my guess is that we're in record territory for Morgan Stanley. No, not quite. According to my Bloomberg screen, in 2022, we were slightly higher for Morgan Stanley. It was almost $109, but we're pretty close. So these big U.S. banks generally reassuring investors here. And the main thing is interest rates likely to come down. That'll make credit cheaper, makes their main product cheaper. And it sounds like at the banks, the equity traders, always a volatile bunch, have been doing just fine. According to Bloomberg, they pulled off a, quote, clean sweep of higher than expected quarterly gains by a startling margin. So there was an 18% in combined revenue in this area and an 18% jump. And that was more than 3 times better than the analysts had been expecting. There were a flurry of dealings, especially in derivatives, led by their largest customers. Okay, so there you have it, Morgan Stanley. Morgan Stanley Chief Executive Officer Ted Pick saying, quote, in institutional equities, we are back. So we are seeing some optimism there about the U.S. banks. Let's have a look at good old Royal Bank of Canada here. That stock has jumped about 13% this year. I see it is trading at almost $152, slightly down from a intraday record high anyway of $152. Okay, so let's get to Stephen Biggar, Director of Financial Services Research at Argus Research. Stephen, great to see you. One factor powering the big U.S. bank results appears to be equity trading.
Well, I would say equity trading, but certainly the capital markets business and investment banking at large. After 2 down years, revenues are looking pretty promising here. We've had across the board a fairly wide range, 20 to 70% gains in investment banking. And yep, we're seeing better equity underwriting. That's amid a rebound in IPO activity, better debt underwriting as credit spreads have narrowed, and even the M&A deal flow has bounced back, which I think is a little better confidence in the soft landing scenario. Trading was strong as well. We didn't have quite the performance we did in the first quarter, but still fairly strong, just not quite as much volatility. Banks don't quite make as much money when markets are kind of consistently moving higher. If there's a lot of underlying volatility up and down, they do, but a straight up tends to be a little bit less in trading. But yeah, very good performance.
And did you say there had been 2 weakish years for the U.S. banks prior to that?
Well, yeah, the capital markets activities have really not been good since the 2020 year, and 2021, 2022 were both down years, and 2022 and 3 were both down years, and a couple of reasons for that. Interest rates were moving higher. Of course, 22 was a terrible year for the equity markets, and a lot of people stayed away from IPO activity. Also had kind of an overhang from a lot of activity in 2020 and 2021. So it's been a couple of false starts in investment banking, but the rebound, at least currently now, seems a little bit more durable. We've had two solid quarters here, and the expectations here looking into the second half, the banks are talking about a pretty good backlog of activity. In fact, Goldman, would normally say whether the backlog increased or decreased versus the end of the prior quarter. This time they said it significantly increased, so you don't usually see that. And that goes along with our thinking that in the back half we'll have lower interest rates, just better economic activity from where we were in the first half, and again, greater confidence in that soft landing scenario.
You favor JP Morgan, Morgan Stanley, and Bank of America. Is there any particular reason why those three are top of your list?
Well, I like the diversification of the business models in particular. Goldman is still more of a pure play. They are trying to expand their wealth management segment, but Morgan Stanley is already there at the 50% level, and obviously has a fantastic investment banking franchise as well. JP Morgan, national banking franchise, global player, strong in the league tables, of course, and across investment banking, and just that consumer franchise, credit card, whether it's home lending. So just great diversity, and Bank of America very similar on the consumer franchise, just has a very well diversified franchise. So we like that. You'll see that in periods of up and down markets, particularly down where you have a different business segment zigging or zagging in terms of the revenue flow, and some segments will help out when others are weak. So that diversification has really demonstrated some good earnings potential in those franchises.